Welcome to this cutting edge Forex pro tips, where we're going to be discussing cutting edge Forex pro tips that will help a trader who is out there who is struggling with Forex, or a trader who is just making money, but a trader want to improve on his trading abilities. These cutting edge Forex pro tips is a cutting edge tips that will help any trader to improve and become a profitable Forex trader. The goal is to improve the results of Forex traders. So the tips we're going to be dishing out here is not just ordinary tips, regular tips that you can find on YouTube, on Google. No, these are going to be tips that you've not heard about before. Okay, with me here is Mr. John Bosco. Mr. John Bosco, welcome to the podcast.
Thank you, thank you, thank you. Thank you for having me. I'm excited to be here. Honestly, anything that concerns trading, I always make myself available. When I talk about the financial market, a lot of people say this is actually what God called me to do because I talk about with so much passion and so much energy, trying to give out knowledge and information because I know that the only thing that can help any human being is when you hear something that can actually bring the light and those things, anything we need in the world to become something in life is already in the world. You just need someone to reveal it to you. And guess what? Once you tap into that information, into that knowledge, is a whole new world. If you look at the world you are living today, there is nothing that we have in the world that is not external. Everything that we are using in the world today is already in the world, just that men discovered it and made it something big. So, and that is what we're about to do tonight, whereby that we're going to share information that is going to help your mind, and you're actually going to understand the Forex market or understand financial markets in general, so you can actually become profitable. Because I know one of the goals of every trader is to become profitable, and I'm here to share with you my journey and some of the things that helped me to become a profitable trader.
Amazing, amazing. Welcome once again. This is the voice of the Simple Trading Professor, and this is the Simple Trader community where we show people how to trade Forex in a very simple way. Very quickly, what this training will do for you is that it's going to help you spend less time on analysis, help you make consistent profits, and also learn how to be a pro trader. A pro. Now, when I talk about pro, I do not mean a professional. I mean pro profitable. Okay, how to be a profitable trader, and how to be a successful forex trader. So once again, we are here to unlock the secrets of successful forex trading. Okay, so let's dive into the cutting edge forex pro tips. We have about 5 to 6, 7 forex pro tips we are going to talk about today. Okay, so the first one we have is trading multiple pairs. Mr. John Bosco, what do you have to say about that? Because a lot of traders out there, one thing they do is that they trade multiple pairs. What can you say about that?
Okay. With all my experience about the financial markets, most especially the Forex market, trading the Forex market, I've actually traded some couple of pairs, and I'm here to say that trading multiple pairs, it is not a good way to trade the Forex market. If you look at Forex market in general, Forex market is highly controlled by the central bank of that country. For example, talk about the US. The Federal Reserve is controlling the US, the ECB is controlling the euro, and so on and so forth to every other currency that we have in the forex market. Their independent central bank controls them. Sometimes there will be something that might happen in the market. A particular currency will move so rapidly. For example, in CHF. Now, CHF is a currency that is highly manipulated. All of a sudden, you can just see a whipsaw from nowhere, and it can even impact traders positively or negatively. You can imagine when we have, let's say you have a whipsaw in the market, and the market whipsawed for like maybe 100 pips or 150 pips. If you're not using a stop loss at that point, you can imagine the kind of loss you be on. Or if you're in profit, you might actually enjoy it. But the truth about the forex market is that forex market is highly controlled by the central bank of the world. Now, depending on the country, and you cannot keep up with everything happening on each currency. Now, the best way to
Yeah.
become profitable in the Forex market is to trade lesser pairs. Now, if I want to say anything, is to trade a single pair. Now, the Forex market was not designed like the stock market. If you look at the stock market originally was designed to keep going up. That's how the stock market was designed. Now, if you go to any Forex chart, go to the monthly time frame, you will never see a long move apart from JPY pairs. Now, the reason why JPY pairs had a very massive bullish movement, anything JPY was just going up, is because for the past 17 years, the Bank of Japan reduced their interest rate to 0.01%. Like they were not giving any interest rates. So everybody was just borrowing from Japan. And once they borrow from Japan, they go to other economy, whether in Europe or in the US, and put their money there. And that keep weakening the JPY pairs. But something happened about 2 weeks ago, whereby that the JPY pair are now forced to increase the interest rate. And guess what happened? We had a very sharp move in the market. Now, if you pay attention to what is happening in the Forex market was not designed to go up. If you can check Euro USD on the monthly time frame, you will see that Euro USD is just ranging. It's not going up. But the stock market was originally designed to go up. If you check any other pair apart from JPY pairs, any other pair is just doing up and down movement. They were not designed to go up. It is controlled by the country, most especially by the central bank of that country. I believe most people that are watching this podcast might be Nigerians. For example, there was a time when dollar got to 1,900 per $1. The central bank of Nigeria has to intervene. What did they do? They went into Nigerian reserve and they spent about $1 billion to be able to control the exchange rates. You see how they can come in? You can't determine the price. The central bank can do something and say something, and the price of an asset can just change. And one of the beautiful things about trading one current lesser pair is that you will master the pair the more. One of the advice I can give you as a beginner, if you're a beginner trader, please focus on USD pairs, mostly Euro USD. Now, as you gain experience and understand the market the more, you can actually go and start trading any other pair. You can add GBP USD or any other JPY pairs or any other pair of your choice. But as a beginner, for you to be able to understand the market effectively and for you to be able to perform effectively as a trader, you need to trade less. One of the things about trading multiple pairs is that you always be on the market. But when you have few things you're looking at, you won't be at the market at all time. And guess what? The more you trade is not the more money you make. The more you trade is the more risk you expose yourself and your chances of losing. Now, one of the best things you can do for yourself is to pick up a single pair, understand that one pair can give you any money you are thinking of. Now, the reason why many of us are interested in multiple pairs is because why? We see them there. Imagine that as a forex trader, we only have one pair, which is Euro USD. That is what everybody will be trading. But because we have several, we now think that several means more money. That is not true. Even if that is what the media or other forex traders paint it to look like. But I can tell you, the more exposure you have in many pairs, the less profitable you become. But if you focus on one pair and understand it more, you will be more profitable and you will trade less. One thing about trading is not every day you are clicking buy and sell, clicking buy and sell. If you continue to do that, you're going to be wrecked. That's all I can say about trading multiple pairs.
Amazing, amazing. What I've learned from what you said right now is that one way to simplify your trading experience, or become more profitable in the financial market is to focus on one currency pair. I know it may be tempting for a lot of traders to trade many pairs at the same time, but this also can also be overwhelming. They lead to confusion,
and especially on social media, if you go on social media, you see people posting GBP, JPY, gold, V75. All of those things are distractions. You don't need to.
Yeah.
All those things distract. When you see someone on social media posting $10,000 they made on gold, guess what? You go to your trading view and start analyzing gold. You just see a lot of, and I did those things, and that is why I'm here to tell you not to make those mistakes. Just stay on your lane, stay on your focus, leave whatever everybody else is doing, because when those people take losses on gold, they will not show you. I know of a guy on Twitter, this guy trades only gold. He doesn't care what any other person posts about GBP, JPY, or USD. Don't care. He focused on gold, and that is his focus. If you love gold, just stay there. It's not about jumping from one pair to another. Because what you're going to be doing is that you make money from this pair and go and lose it in another pair. That's how bad it is.
Yes. And when you focus on one particular pair, what it's going to do to you is that it's going to help you develop a deep understanding of the behavior of that particular pair and understand the price action. You're going to understand what moves the markets. That is very, very vital in the market. Basically, I love what you just shared with us right now. Something that we need to take to heart. Because a lot of traders, they want to trade multiple pairs. They think that if there is no opportunity on JPY, if they look at GBP USD, they might see an opportunity there. So why let go of the opportunity on GBP USD because they want to focus on one pair? What do you have to say about that? Because some people don't want to miss opportunities.
That's one thing about being disciplined. What the word being disciplined is that no matter what happens, this is how you're going to react. I get those temptations. I think about a few days ago, I wanted to take a trade. That trade was not clear on Euro USD. But I look at AUD USD. AUD USD was so tempting. But because of what I told myself, one thing about discipline is that you say something and you be able to adhere to that thing that you say. And that is what makes you a better person. We're not talking about trading now, because there's this quote I heard some time ago that it goes like this: the way you do anything is the way you do everything. Now, if you're a disciplined person, if you are somebody that honors your word, it will show. It will show in everything you do. You can imagine when you say that you want to focus on GBP USD, and guess what? You see opportunity in USD JPY and you are jumping in. Doesn't make sense. There's this guy I know in Nigeria that is very disciplined, and I have never seen a guy that is disciplined like that. His name is Jeffrey Benson. This guy has been trading GBP USD for more than 5 years. Now, he has all the capital and all the resources to start checking what is happening on gold, what is happening on other pairs, or even start trading tariff, volatility. He has the capital, but he was able to build discipline. It is called self-control. I want you to understand that you will not take every opportunity in the market. It makes sense to lose opportunities. It makes sense. So don't be tempted and stop telling yourself, what if I didn't see opportunity here and jump it? No, you are breaking the rule. Unless you have a rule of maybe tell yourself, okay, I cannot focus on one pair. You might not be able to build that discipline. You can tell yourself, okay, let me start with 3 or 2. At some point, I did those things. I was doing 3, I was doing 2. At some point, I noticed that my result was not rhyming. I didn't like the result I was getting. I have to tell myself, I need to focus on one. Because if I focus on one, I will perform effectively.
Amazing. Amazing. I love what you just shared with us right now. Although, what I want to ask now is not part of it. But I just want to ask you, do you think that strategy and that one strategy may not work for 2 different currency pairs? Let's say there's a strategy, this strategy can work on USD JPY, they may not work effectively on gold. Do you think it's like
that? Okay. If I want to answer that question, I think Forex market is a different market. Gold is a different market. Gold is not a Forex market. Gold is a futures market.
Okay.
You understand? So if you look at gold in the past week, gold has been going up for weeks. I'm not talking about 5 or 7 weeks ago. Gold has been going up for weeks. It doesn't happen like that in currencies. It does not. Now, the reason why gold is going up for weeks is that whenever there is high inflation, most especially in the US, gold always rally. And whenever there is panic and fear, if you look at what is happening in the Middle East, whereby that there is a lot of fighting going on between Israel and some other neighboring countries. All of those things make people to be afraid, and people don't want to put in their money on. People don't want to put their money on USD. People start investing in gold. So when you look at gold, gold is a futures market. Now it is a market that is being controlled by the willing buyer and the willing seller. What it means that gold, the people that determine the price of gold is me and you, whereby that I have gold. I told you that I'm selling gold for maybe 2,500 ounce, and you're willing to buy it. Guess what? I sell it to you. So if everybody in the world wants to rush and buy gold, what do you think that will happen to the price of gold? The price will keep going up because of what? Demand and supply. But for currencies, it is very, very different. There is no chart that you see that the currency has been going up for 7 weeks, apart from JPY pairs. I told you what happened in JPY pairs because of the decision by their central bank. That was why it was going up. There is no chart that goes up for 7 weeks straight up. It doesn't happen that way. There will always be retracements. Now, for currencies, currency is a quote-driven market. Is a market that is being controlled by an institution. In that case, it is the central bank. So to answer your question correctly, the strategy that works well in the Forex market might not work in the gold market. Because of gold is another different market, Forex is another different market. So, and one thing about financial market is not really about strategy. Yes, you need to have strategy, but you need to also know the sentiment and what people believe about something. At that time when gold was going up, gold keep making all-time highs because there was a lot of fear, there was a lot of panic, a lot of people were afraid, nobody knew what could happen, and guess what? Everybody was rushing to buy gold, and gold price, what happened in gold during that week? There was no technical analysis to analyze it because every single week it keep making all-time highs. Anybody that's trying to sell gold keep making losses. So you need to also understand that it's not just about strategy. You need to also understand sentiment and what is going on in the world.
Amazing, amazing. I just want those traders listening to us to understand this, that not all strategy works on all markets. Some strategy will work on one market. So you need to develop. As you are developing, you are working with one particular pair in the market. You have to look for the strategy that works with that particular pair that you want to trade. Don't bring a strategy you are using to trade gold to trade USD JPY. It won't work that way. You have to look for the strategy that works with that pair that you're trading. So let's move further to another 14 edge forex quotes, Mr. John Bosco, and that is something that traders does a lot. Is a mistake they used to make, which is trading against the trend. What do you say about this?
Okay.
And how do traders fall into it?
Okay. I think I have actually learned this particular topic the hard way. If you look at the way technical analysis was taught, that is actually the reason why people trade against the trend. Everything starts from the way we learn technical analysis. Because if you look at the way we learn technical analysis from our mentors, they usually taught us about higher highs and higher low, whereby that when a market make a higher high, the market will make a higher low. And in that drawing, the higher low they will draw is that the market will come down very well for the higher low and then make another higher high. Now, when people look at those diagrams in learning those things, or even support and resistance, when you look at those diagrams in learning those things, now when you start seeing it in the charts, do you know what you will start remembering? You will start remembering what you are being taught, whereby that your mentor taught you once the market gets to a resistance, it drops. Once it makes a higher high, it drops. That is what you'll be remembering. And guess what you will start doing? Now, you're no longer seeing a trend. When the market is pulling back, you're no longer seeing it as a pullback. You are seeing it as if we're going to have a major pullback. You don't know whether the market just wants to make a little bit drop and just push up. But if you look at the way the market prints charts, it is in dynamics. Like it is very dynamic, whereby that you don't know what it will do. You don't know whether the pullback will be deep. You don't know whether it is going to be a short pullback for the trend to continue. Now, this is the reason why people trade against the trend, because of what they were taught by their mentors. I am saying this because why? I was also taught the same thing. And I was able to experience it firsthand. And I found out that it was my knowledge, the knowledge that I sat down to listen to. That was when I believed. That was when I grabbed those things. Now let me give you an example with what is happening in the physical life. If rain is if there's a heavy rain right now, can you say that by 12 o'clock, let's say rain started by 7 a.m. Can you tell yourself that by 10 a.m. that you must go out by 10 a.m. that the rain will stop? Will you go out? Will you go out?
No.
Because you know that it's still raining. The only thing you do, you wait and sit down and wait for the rain to stop before you go out.
Yeah.
Now, but in trading, people just say, oh, market is going up. Once you get to this resistance, it's going to drop. Why are you forcing the market to go down? Now, the reason why people can be able to say that the market is going to drop here is because of what they were taught. They are not waiting for the market to show them sign of dropping. They have already created an illusion. And one thing about the market is that whatever illusion you create in your mind, that is what you'll be seeing. You will not see that any other thing is possible. If you expect that, if you have in your mind that once the market gets to a particular resistance, it will drop, guess what happens? Everything that is happening in the market at that moment is for you to sell, to sell, to sell. You no longer consider that the market might continue to go up. And this is the reason why people fall into this problem of what? Trading against the trend. Whereby that if someone tells you if there is a pull, if market push up and the market is returning to that low, buy it. You're not knowing that the market did a pull back to continue the downtrend. Now, there is a way to trade against the trend. Don't get me wrong. I do trade against the trend, but there's a way I do it. Now, before I trade against the trend, if I know that a trend is bullish, for example, that is, if a trend is bullish in a particular day, and original trend is bullish, there is no way I'm going to sell it that day. I am not going to sell it that whole day, whether on London session or New York session, on Asia. All I'm waiting for is to wake up on if throughout that day, when on New York, London session and Asian session, the next day, which is on London session, on that next day on London session, it's not that I will sell, or I will not sell, or I will not reverse the market. I will keep paying attention to the momentum of the market. Now, if you look at the way Forex market trends, Forex market, if they want to trend, they usually trend for 3 to 4 days consistently. On the 5th trading day, they usually give a deep pullback. It's not that sometimes they will not trade and pull back, but if the trend is very heavy, it's usually from 3 to 4 days. And I look at those and I pay attention to when trend is when we are in a trend, and again understand the beginning of trend. Because if you do this in the beginning of a trend, you're going to make a lot of losses. All you need to do is to wait for the market. If you trade against the trend in the beginning of a trend, you're going to take lots of losses. Just wait for the markets to show you exhaustion. Show you exhaustion. Now, if you see a market that is going to reverse, pay attention. On the New York session, if the market start moving from London session and gets to New York session, now on that New York session, let's say in the night, I'm talking about Nigerian time, it will stop moving. In the Asian session, it will not move at all. It will just stay there. Guess what happened on London session? On London session, you see a very big reversal. But if on Asian session market moved, there's a tendency that the market would continue moving on London. And it might even see another thing you need to also combine in trading against the trend is sessions. Very, very important. What I'm telling you right now is not a strategy thing. It's intuition I've developed in the market. There's no way I can't even know how to teach it, because all of them is very subjective. There's a way I use them. I use them based on experience. It's not something I can tell you, this is how it's done. No, it's something I've sat down, looked at the market, and I was able to build experience. What I'm saying right now about sessions, about all these things, if the market is in a trend, don't enter, sell the next day. I can't really teach it. That's why I said Forex trading is very subjective. It's not about what you learn from a mentor. It's about the way you have actually developed yourself and get better over time. So it is important that you understand that trading against the trend is so wrong. I really understand, because most of you want to get snap entries. Now, all you need to do, if the market is in a trend, please, if the market is selling, please keep looking for selling opportunities. If the market is buying, keep looking for buying opportunities. until you now understand how to trade against. I do trade against the trend. I know when to do it. I know when not to do it because of my experience. Because of my experience.
Amazing. So
okay, if you look at the recent,
for that trader who do not have an
come
experience,
again with your question.
what they want to do is focus with the trend. Do not even try to take trade against the trend.
Obviously, yeah. For that trader that doesn't have experience, you are still a beginner. Please focus on the trend. When the market is buying, look for opportunity to buy. When the market is selling, look for opportunity to sell. But one of the things you need to do is to pay attention what is happening in the market generally. That is why I said you should be trading one pair, because the only way you can gather all of these experience and knowledge is when you pay attention to one pair. But when you pay attention to different pairs, you don't know what is happening. What I just said right now about looking at sessions and all these things, knowing when to trade against the market is called scenario analysis. And scenario analysis can never be taught. It is experience. Now, there is no way you can have experience if you don't engage in the market. So, as a beginner, forget about me, what I'm telling you about sessions. In my head, it right now, all you need to just start paying attention to it, start observing it. But as a beginner, focus on the trend. If the market is selling, look for opportunity to sell. If the market is buying, look for opportunity to buy.
There's this beginner question in my head right now. And that beginner question is, how do I know the trend? How do I identify the trend to be able to trade with the trend? What time frame do I get to know the trend, and what time frame do I take my trade from?
Okay, as a beginner, the only way to identify the trend is if you understand market structure. Market structure is how you can actually identify a trend. Now, if the market starts moving in an uptrend, it moves higher highs and higher lows. That is uptrend. Now, if you want to understand higher highs and higher lows, there are a lot of there are courses who have already put in this training that can help you to understand. I am the one that did it myself. You need to understand higher highs and higher lows. That is how the market trends. Now, when a market breaks a particular structure on the upside, breaks it with a body close, sometimes with a wick, it is being identified that something has already changed. So it could be a change of structure that the market is about to be shifting from bearish to bullish. So if it's a bullish market, it is higher highs and higher lows. If it's a bearish market, it is lower highs and lower lows. Now, Iman, this is not what we can maybe explain 100% tonight, maybe talking about it. But if you actually understand market structure, you will actually, once I'm saying this, you actually understand what I'm saying. But in our subsequent trainings and mentorship class we're going to be having, we're going to discuss that so you can actually understand what trend is all about. And as if I'm the one going to be teaching you, I'm going to be having a session with you, or even if anytime we're not going to be having a session, whenever a trend is changed in the market, I might even screenshot it and do a short video about it and post it in the group so you can actually start understanding and learning how market works.
Amazing. I love the fact
that
we get to let them know that big is also coming after this training that they are going through. Okay, so let's dive into what we have, the next Forex pro tips, the next cutting edge Forex pro tips. And what we have here is focus on being a profitable trader over being a professional Forex trader. Why this is important to me? Because a lot of traders just want to call themselves pro. I'm a professional trader, I'm a pro trader, professional trader. And one thing I understand about professionalism is just about having so much knowledge. Once you have so much knowledge about a particular topic, you can be seen as a professional. Okay? You can be seen as a professor in that field because you have a lot of information, a lot of knowledge on that particular field. Now down to Forex, somebody can be a Forex professional if you understand a lot about the financial markets. One can do this in the market over and over again, reading books, taking courses for over a period of about, let's say, 12 months. You can become a professional. But being a professional in the Forex market does not mean that you are profitable.
Exactly. True.
It's true. Profitable. So One can actually learn Forex for 12 months, do 24 months, and still not be profitable. And what
Mm,
can make that person become profitable is just the right piece of information with some
mm,
practice sessions. So the right piece
mm,
of information can make someone be profitable. So with that in mind, focus on getting the right piece of information to make you become a profitable trader rather than focus on gathering all the information out there to become a professional trader. What do you think about
mm.
that, Mr. John Bosco?
You actually said it all, whereby that a lot of people think that the more they know in the forex market, the more money they make. As a matter of fact, you don't even need to know so much to make money in the market. That is why you see people keep thinking that there's something they're going to learn out there, maybe buying a $1,000 course or a $2,000 course, thinking that if they know how to become professors, so there are some people who become a professor, whereby that each candle move that happen in the market, it has meaning for them. They know what to call
Yeah,
it. They can tell you it's called inducement, it is this, it is that. Like they have meaning for every candle. Like every candle has
yeah,
meaning. That's for me, that's professionalism. And
amazing.
those people are not really making money. Those professionals, professionalism, whereby that they have to explain everything that happened to each candles. No, that is not the way forex market works. Now, I want to say this about the forex market. Forex market is made up of two things.
A profitable trader. What can make one to be profitable in the financial market?
That's what I want to say here. Now, there
Okay,
are two things that can make you a profitable trader. Number one
okay.
is called your intuition. Now, intuition is made up of your experience, and there is no way you can have experience unless you are trying, unless you are doing something, unless you have been in the game. It's not something whereby that you do this month or you do 3 months. If you take a loss, you leave the market for another 3 months. And if you see a friend of yours post profit on social media, you come back to Forex again. You're just messing yourself up. You're not consistent. But when you are consistent, you are building market experience, you are observing your actions. That is one thing that will make you profitable. Your actions are the things that will make you profitable. And that your actions that are called your intuition, your experience. So, because if you don't know what you're doing wrong that is making you losses or that is making you unprofitable, guess what happens? You will keep repeating it and you will keep looking for more videos to watch from different people, trying to learn what they do and bring it. See, every human being is different. In as much as we have one head, two hands, one body, two eyes, and all these parts of the body, that doesn't mean we are the same. We're not the same. That's the truth. Let nobody think that you are the same because what goes in my mind does not go in your mind. There are some people who they can't do some certain things because of they are afraid. I used to watch fights a lot. There are some people that told me I can't be a fighter. Why? Well, they are still human. It's still the human being that are fighting. But someone say that he cannot be a fighter. Why? Because the person loves their body. They don't want to take pain. Why some other people they love pain? You see why we are different human beings. So now let me bring it to animal world. There's this statement that is very popular. They said that if you judge a fish by its inability to climb a tree, it looks like that fish is foolish. Now, if you bring out a fish from the water and put it on the soil or on the ground, that fish will die. But if you put that fish inside the water, you will see the skills of the fish. Now, the same thing with other animals. So now it means that if you look at the forex market is a representative, it is a chart representative of people's emotion. This is people who are fearful, people who are greedy, people who are patient. Now you need to understand your temperament, your personality, ethics, who you are. If you can be able to know who you are in the forex market, then you now have to find what can help you. Now, there's a book I was reading. It's called one of the book I recommend every beginner, and I think we're going to give it to every beginner. It's called The Market Wizard. Now, The Market Wizard is a book comprising about so many successful traders, a lot of them from different walks of life. Now, all of those traders, none of them trade one strategy. None of them trade one style. Some people say it is scalping. Some people say it's day trading. Some people say it is swing trading. Some people say it is niche trading. Some people say it's I don't trade with stop loss. Everybody have different opinion. Now, guess what? All of those things work for each and every one of them. So one of the things that can help you in trading is your intuition, which is what you have developed over the time you have been trading. What are the things that you know that if you do it over and over again, it will have an expected result? That is the first. Now, the second thing that can make you profitable in trading is something called risk management. A lot of traders want to make money immediately, especially in the world of social media on Instagram. When you go on Instagram, you see someone trading gold and they open 10 lots, 20 positions, and you see them having $500,000 running on their account. Those things are so tempting. You could be tempted to do something like that. And guess what? When you try it, you're going to bleed. You're going to bleed because you think that you now understand the market. You can now, and that overconfidence, that's what overcome. Because if you're in a winning streak and you see your position and load everything, you have chances of losing everything you have made. So risk management is important. And your risk management is not your lot size count. Sorry, it's not your pip count. Some people say have your risk management. People think that risk management is about having 10 pips or 15 pips or 20 pips. Now, those things are still part of risk management anyway. But the best risk management any trader can give themselves is lot size. As a beginner, focus on trading lower lot size. Very, very important. Now, the reason why I said focus on trading lower lot size is because over time, you begin to understand the way you trade and the kind of personality you are, and you can increase over time. Because if you start using high lot size from day one, it will affect your emotion. Your emotion will be everywhere. If you enter trading, you'll not be sleeping. And that is when you develop a lot of bad character or a lot of bad attitude or a lot of emotional pain about trading. Like me, I developed an emotional pain of trading gold. Whenever I want to trade gold, guess what happens? I will be remembering that gold can blow my account. Why? Because previously you have used a heavy lot size that blew your gold account. So you start you start building all of those mindsets from day one. So when you have a good lot size, you just know that you're not just there to you're there to understand, okay, what kind of a trader am I? How many pips stop loss is better? Is best. Even if you say you are risking $1,000 per trade, for example, you don't need to be using, let's say, use a heavy lot size. You don't need to. Maybe you can use 2 standard lots. You know that before the market will get to $1,000, when you use a 2 standard lot, maybe it's around 30 pips to 40 pips. Now, if you know that if the market goes against you for 40 pips, you now know that there is something you need to adjust, maybe in your entry or somewhere, or look at your strategy in general. So, but when you want to become profitable, if you really want to become profitable, work on your lot size. Very, very important.
Amazing, amazing. That's amazing, Mr. Jumbos. I love that. I love what you just shared with us now. The 2 ways to become profitable in the financial market.
Becoming a profitable Forex trader is not about being a guru. It's not about being a guru. It's just obedience to principles.
Once you can obey principles, you are going to become a profitable Forex trader. And one of the principles that is here for us to obey is the principles of risk management. Understand the principles of risk management and obey this principle. Once you do that, you are going to become a profitable Forex trader. That's amazing. So understand the strategy, the risk management, and then stick to the rules. Once you are disciplined to stick to these rules, then you are going to become a profitable Forex trader.
True.
Now, let's move on to another cutting edge Forex pro tips, and that is overtrading. Overtrading. Mr. John Bosco, what do you have to say about overtrading? Because a lot of traders, they usually fall into this mistake of overtrading. And overtrading, I see it come in two ways. Number one, traders spending excessive time analyzing the charts. They are always on the chart, always looking at the charts. Number two, traders, even after meeting their daily profit targets, they are still trading to want to get more money from the markets. And they know that they have done, like, in just one day, they have done, like, let's say 5% of their accounts. They still want to enter the markets. So what do you think about overtraders or overtrading?
Okay, I think the root cause of overtrading is multiple pairs. Let me start from there. That's the root cause. Because, like you said, people keep looking at opportunities that are not there. Because you already have a setup in your mind. Now you keep looking at GBP, USD, AUD, Euro AUD, AUD CHF, NZD. You keep searching to find that setup. And that will keep making you to overtrade. Now, I said something when we started this podcast earlier. I said that it is not the more you trade, the more money you make. As a matter of fact, the more you trade, the more you expose yourself to a lot of risk and the chances of losing more money. As a matter of fact, this particular week, we are currently on Thursday. Forex week is actually 5 days in a week. I think this morning, the trade I took this morning was the first trade I took this week. You can't believe it. And I'm still holding that trade maybe till Friday, which is tomorrow, or maybe till Monday. You see, because why? I have understood it the hard way that it is not the more you trade, the more money. It is not. As a matter of fact, the more position you open, I'm not talking about opening positions in terms of trade. I'm talking about the more trades you enter all the time. Maybe some people in a day, they can enter 3 different pairs. Like, you don't need to do that. If you can't be a swing trader, if you want to be a day trader, you can do day trading in one pair, whereby that you understand a setup you're looking for. Once it shows up, you're taking action. Over trading can really destroy your account. And another thing that causes over trading is losses, trying to recover losses. You are now emotional. You're looking for opportunity to recover your losses at all costs. If you try doing something like that, you will cause yourself lots and lots of pain in the market. So one of the things you need to do is to have a plan. That's one of the things that can work. You need to do to overcome over trading. Have a plan that you work with. Have the amount of money you want to risk in a day, the amount of money you want to risk in a week, the amount of money you want to risk in a month. It is very, very, when you have those plans in place, when you reach those thresholds, you stop. And guess what? Opportunities doesn't always show up in the market. It does not always show up. Like I told you my own story, this week I only traded on Thursday, but I was thinking, what kind of a week is this? Because normally I don't trade on Mondays normally, but on Tuesday and Wednesday I should be entering positions. But it is what it is. This week was awkward. I didn't enter any position until Thursday. And I entered that. I saw that position on Wednesday. I started planning it on Wednesday night. On Thursday morning, I saw the opportunity. I took the trade, and I'm holding my trade till now. Some people must have already entered that trade and leave. Now, let me share something with you so you can also understand. A lot of trade, I love day trading. I'm not against day trading. I'm an intra-day trader, whereby that I enter the market. There's a target I'm looking out for on the 4 hours. I take my profit on the 4 hours, not even on the daily. Now, I take my profit on the 4, though I also look at daily to look at the support and demand and supply on the daily, very important. But this is what I do on the 4 hours. Now, a lot of traders, when you enter the market and the market moves, let's say 50 pips or 70 pips away from you, there's this excitement of closing. People know how to hold losses, believing that it will come back, but they don't know how to hold their position. Now, this is the way I put it. Now, if you look at that money that you are making when you enter a trade, that money was not originally in your account before. Now, for you to maximize that trade very well, all you need to do is to use break even. You can do a break even of 1%, and you tell yourself, okay, I've secured maybe 0.5%, or you have secured your spread or your commission, whatever you want to secure in the trade. Just secure it and allow the rest of the trade to run. Because the truth is, we don't know how far any opportunity can take us. Some people will enter good opportunity, just that the market moved in their favor, they close. So one of the ways you can avoid overtrading is if you enter a position and you are making profit, just break even. Tell yourself, I'm doing break even, I'm securing this profit, whatever that happens, I don't care. If you do that, remember, many of the times the market will come and hit your break even. That you don't need to worry because the money was not originally there. You now know that you're no longer risking your capital. You are risking market profit, and that market profit, you're not entitled to it. And you're not just risking market profit, you are risking market profit for more rewards. That is the idea. Because there are some positions you can enter, and if you can hold it for 1 or 2 days, you'll be surprised the kind of money you will make. So the purpose of overtrading is, is a lot of things, but I can tell you, you need to have a plan to be able to overcome overtrading. Thank you.
Amazing. So a trader need to have a strategy, and the strategy sometimes comprises of entry condition, exit condition, maybe your stop loss and your take profit
Management condition too.
and also, let's say, if you're analyzing the market and you don't see your entry condition, it means you are not entering the trade. That is the time to be patient. That's the time to sit on your hands, because not trading is also part of trading. And by so doing, you are not going to get. Now, if you are on the market, let's say you've seen your entry condition and then you enter the market, don't rush to close your trade on profits. Don't rush to close your trade on profits. You close your trade on profit or on loss when you get your exit condition. So if your exit condition based on your plan does not show up on the market, you want to remain on the market. Most times people rush and take out their profit because of fear. Fear.
Exactly, because of fear that the profit will go back to loss. Profit that was not there before.
Yeah. And sometimes when the market is even going against them, now they are losing money, they will even see condition for exit to leave the market. But because they are already on loss, they don't want to exit. They will hold.
They don't want to take loss.
And that is greed.
Exactly. And that they will incur more. And this is very psychological. Do you know that people enter a position and will hold losses, believing that if they hold this loss for maybe 2 days, it will recover? But when they enter profit, they are scared that this profit will go back to entry. They don't believe that if they can hold this profit for 2 days, they will keep money. They don't believe it. It's not about the mindset. The truth is that whether you enter market buy or sell, the market doesn't know. What the market understands is that I will keep going into the direction I want. So it's just you as a person having a plan on how to follow the market.
Amazing. Now, one of the techniques I also see that can help traders avoid overtrading is they want to set time frame boundaries. That is to say, because one thing you see traders is that when they open their phone or their laptop to analyze the market, you see them analyzing, let's say, 1 hour chart today. The next day they are analyzing 15-minute chart. The next day they are on 1 minute chart. The following day they are on the daily chart. They don't have time frame boundaries. You have to know what type of trader and know the time frame you want to be looking at. You can pick 1 or 2 time frames that, okay, I'm just going to be based on these 2 time frames. But by the time, maybe even on analysis, you are going to daily time frame, all the time frame, just checking what you don't know. You find yourself just looking at the laptop, looking at the charts, you're over trading. So once you can set time frame boundaries, these are the time frame I want to use to analyze my trade, then you are going to cut short or cut down over trading. There's something else that also helped me in particular is what I call conduct periodic analysis. Conducting periodic analysis. Now, what does this mean? The techniques I've also discovered that is helping me to avoid overtrading is by conducting periodic analysis on a higher time frame. What do I mean? I pick a time frame, for example, let's say the 4 hours time frame or the 1 hour time frame, and then I do my analysis there. Now, if, for example, we're going to have entering conditions, okay? Now, I check the market for my entry condition. Then let's say, for example, I got a condition to enter the market, a reason to trade, and then I execute the buy trade, for example. One thing you see most traders do is that, for example, on the 1 hour time frame, you have executed buy trade. You see them looking at their phone 5 minutes, every 5 minutes. In fact, some of them they are just gazing on their on the charts. That is what leads to them closing trade on profits too quickly.
Exactly.
Now, what conducting of periodic analysis does for me is that as soon as I execute a buy trade on the 1 hour time frame, I don't look at the chart anymore because I know two things should happen. Either I'm coming to the market to close my trade on loss, or coming to close my trade on profit, or coming to the market to see that my trade has already closed on stop loss or take profits. So why then am I looking at the charts? So what I do is I will wait for that particular 1 hour candle to close before I come check the market to make another analysis of what is happening in the market. So I'm on a buy trade, check the market again during that particular candle. The candle is always moving up and down until that candle closes. I come again and check how did the candle close. Did it close? What to close for me to get the market? So if the candle close and I see that my entry condition is still on, I'm still going to hold on to that trade. I'm not closing that trade. I'm going to leave the market, come back again when this new candle closes. When this new candle closes, which is the next 1 hour, I'm going to check the markets again. How did this candle close? We get to a time when the candle will close, and when the candle is closing, it's going to close and give you either a exit condition. That is when you can now exit the trade. But what that does for me is that only get to look at the chart once. Looking at the chart, I'm coming to the market just at the candle close, and it will not take more than 30 seconds or 1 minute to check how did the candle close. Then my condition for entry for exiting the trade will be met. If no, I'm leaving the chart and going back to what I'm doing. And these techniques have helped me a lot because sometimes I do my analysis on 4 hours. If I get an entry on the 4 hour time frame, what it then means for me is that I'm on a buy trade, I'm on a buy trade. The next time I'm coming to this market to share the market is the next 4 hours. I don't have any reason to share the trade within that 4 hours that candle is still open. There's no point checking the market. I have to wait until that candle has closed and check how the candle has closed. And that is one thing that has helped me is that I set alarm every 4 hours, which is about 6 alarms in a day. So my phone will ring 6 times in a day for me to check the markets. Even if I'm not on a trade, once that alarm rings, I'm going to check how did the current 4 hours candle close. Do I have a buy signal? If no, I'm not going to look at the market again until the next 4 hours. And that will reduce the amount of exposure I have on the chart, the amount of time I spend on the chart. Because when I'm coming to the chart, I'm only spending about 1 minute for analysis. No more than 5 minutes for analysis. And when I do that, I don't get an entry or exit, I leave the chart. I come back again in the next 5 minutes. So what this does for me again is that if you calculate six times in a day, checking the market 6 times in a day, and spending, let's say, 1 minute or 2 minutes, it means I'm not spending up to 20 minutes per day analyzing the markets.
Obviously.
One thing that has also helped me, and traders can also apply this method to help them become profitable. So, Mr. John Bosco, let's move on to something amazing that I would like you to talk on, and that is what do you think about traders that are targeting a certain amount of profit per day from the market? What do you think about those traders? Because some traders will tell me, Professor, all I need from this market is to be making $20 every day. In fact, even if it's just $10 every
I think the reason why people think that is a problem of the mindset. It's a mindset thing. And I was thinking that way when I was a beginner. It's not bad to think that way because you have an experience in life whereby that you already do a calcul. People are good at calculating whereby that if I can be earning. That's why I think this mindset start from salary, whereby that people start predicting their income. Now, when you start predicting your salary by end of 12 months, you know how much you can earn in a year. It gives you that excitement. So when you now come back to Forex market, whereby that they said that you have opportunity to make money every day, and there is no money, there is no amount of money you cannot make a day. And an average Nigerian who is having a lot of money crisis might see $10 as a big money. $10 right now is around 14,000. So it's a life-changing money for an average Nigerian to be earning every day. So an average Nigerian will just calculate $10 by 20 trading days. That's $200. And if you multiply it by 1,400, that's a lot of money. That's about 240,000 naira in Nigeria. So an average Nigerian sees that as a life-changing money. So it's not bad as a beginner. Like I told you, everything is about experience. If you as a beginner and you are setting monetary targets, $10, $20, $50, $100 a day, it is not bad. Start from there. That is where you are at the moment. So you don't need to jump. All you need to do is to get comfortable with you making $20, $30. Just once you do that consistent, if you do that and you achieve that, guess what will happen? Your threshold will now increase. I don't need to force you to tell you it's a wrong mindset. It's not a wrong mindset, in as much as it looks like you are limiting yourself, but you're not really limiting yourself, because if you start hitting that $20 a day, $30 a day, $50 a day, guess what will happen naturally? You want to go to $100 a day. From $100, you want to go to 1,000. From 1,000, you need to go to 10,000. So you keep on increasing the ceiling. So as a beginner, you can start with that. But where you have problem is that, let's say you develop a mindset that you don't need $1,000. But there's nobody that will develop that mindset, because once you start achieving $10, $20, $30 daily, it becomes common. You want to do more. That is human nature. So as a beginner, starting at that level is not wrong. It's not bad. Start with $20 a day. I really understand where you're coming from. You're actually saying those things because of your previous experience. That is the level of your thinking as of right now. Because as you grow, your thinking will change, because the Bible said that as a man thinketh in his heart, so is he. So I need to leave you at your level right now, because there is nothing I will say right now that will change your thinking. It's over time. You now see that $20 doesn't make sense again. You have to now internally change it to 1,000 or 2,000 or 10,000 or even 100,000, depending on how you grow in emotion.
Mr. John Bosco, one of the downfall I see in this way of thinking is this. Now, when a trader starts saying that I want to make $20 per day from the market, now even let's say $100 per day. Now they come into the markets today with a mind of making $100, and the market is not fit for you to make your $100. The market cannot give you $100 that day. And let's say the market is bringing that day. Now, what they want to do is they want to must combat that $100 from the market. Sometimes they will do everything possible to ensure they make that $100, and that will lead to them losing more than $100 for that day.
Exactly. What you said is true. There's a lot of consequences in that kind of thinking. What you said is true, whereby that a trader is imposing his will. No, this is now a trader imposing his will to the market, not the market imposing to the trader. But when a trader starts imposing his will to the market, that's where problem is, whereby that you start forcing trades, you start looking at what is not there because you have a target. So, like you said, thinking those in that ways has a lot of mental hurdles. But the best thing to do as a trader, as a beginner trader, do not have monetary targets. Do not. It is not good. Do not just tell yourself, okay, once I see opportunity, take action. Once you see opportunity, take action. Once you see opportunity, take whatever the action result to, accept it. But do not have monetary targets. Monetary target is actually going to force you to overtrade as well.
Thank you. Only accept what the market is offering to you per day. The market can give you more than you're expecting, give you more than that $100 per day. So do you mean
Obviously.
you have to close your trade on 100? No, if it's $1,000 the market, you take it.
Exactly. A lot of people
And
will
there are
not.
days where the
Some people are afraid of money. Some people they are afraid of money.
yes.
They are afraid.
That is
They have
it.
not seen
So
big money.
yes. Let's move on to another Forex pro tips. What do you think about the mindset of looking at Forex more the standpoint of an investor? Can traders see Forex as an investment?
Yeah, forex trading is still part of investment, but it's a short-term investment. Yeah, it's a short-term investment that lasts between 1 hour to as long as you can hold. So forex trading is still so investment. So if you want to see forex trading in a standpoint as an investor or investment, that means you are moving to swing trading. That's what it is. Now, of which swing trading is one of the best way to trade. It is one of the best way to trade. But the problem is that when people start putting real money in trading, they become emotional. That's the problem. People become it because people are emotionally attached to money. Nobody wants to lose money. So because of that attachment, people will start responding to their emotion and they will do a lot of things that will cause them harm. And those things they are trying to avoid because of what they are thinking, they are not willing to let go of the money. Those things they are trying to avoid because of the way they are behaving emotionally, they will cause those things they are trying to avoid to happen. So forex trading in terms of investment only talks about swing trading, of which is the best form of trading. It could be entering a trade, holding it for 4 hours or 8 hours or 6 hours, or holding it in a day, holding it in 2 days, holding it in 3 days. So it's still an investment. It is called intraday trading. Intraday trading, not like scalping. But a lot of people would disagree with me because so many people have made money with scalping, which is true. So forex trading is also an investment, but it's a short-term investment, unlike some long-term investment like investing in stocks, investing in real estate, investing in cryptocurrency. So forex trading is a short-term investment, whereby that you can enter and sell in maybe in 2 minutes or in 3 minutes.
There was a day we were talking some time ago. You talked to me about how people can see Forex as like farming, where there's a planting season, there's an harvest time, there's a time to sow, and there's a time to reap. How can we connect this to what we're talking about right now?
Okay, now the way we can connect it, understanding that if you look at what you just explained right now, it talks about you knowing when to get into the market and knowing if you get into the market, then you exercise patience. Every farmer knows that if I plant a corn in the beginning of a rainy season, I will start cashing out in 6 weeks because I think it's about 6 weeks for a corn to grow. So once you do that, you now exercise patience. Patience is so the market has moved away and maybe continue going in your favor. So the most important thing as a trader is for you to build. It is important to understand that forex trading and farming is about you developing patience. Now, that illustration I gave that time was about talking about patience. Patience is so difficult. People don't know how to hold trades. That's the truth. But that is how to become profitable. Because if you look at the market is always moving. But people once they make 50 pips, 30 pips, they just want to take it. They just give me this 30 pips, let me hold. Forgetting that that thing can turn to 100 pips, 150 pips, 200 pips, 300 pips, but they just want to take 50. And the problem is that if they take that 50 pips, the next day, they still come back and look for opportunities. Like, can you just imagine?
That is
Then
it.
what's the
That
point
is
of
it.
taking it? You are coming back to look for opportunity again.
That is it. And that is why I love swing trading, because when you compare swing trading and intraday trading, one of the difference is the time frame you are looking at. And,
Obviously.
looking at, let's say, for example, the time frame to take your entries, okay, and somebody looking at the 1 hour time frame with his entries. On the 1 hour time frame, you're going to be catching, let's say, 50 pips, because every strategy you are working with will give you an entry and exit based on the time frame you are looking at. So the same applied to the 1 hour time frame can give you 50 pips. That same strategy, when applied to the daily time frame, can give you 400 pips. So trying to catch big movements on the financial markets, you have to start thinking of trading as a swing trader, which is trading much higher time frame. So I really love that point that we have to sow, we have to reap. Between sowing and reaping, there is patience. You have to wait. You have to wait.
Exactly.
And every trader needs to develop the patience, the discipline to be patient.
Mm.
So that's it. So the last pro tips we're going to talk about today is on simplicity. How traders can focus on simplicity, because a lot of traders, what they do today is they trade with strategy that is very, very complicated. And this is not their fault. It is not their fault. It is the fault of the Forex coaches they have met, the people who taught them how to trade Forex. And a lot of people think that it is when your strategy is complicated, that is when it's working. But reverse is the case. You see some people on their charts, the indicators that is there is so much, too many indicators, about 5 to 6 different indicators on just one chart, trying to make profit, and they will tell you these are multiple combinations. What that does for them, it is helping them to lose money. And I tell people the other truth you need to accept in the financial market is that Forex is very simple, but your brain will always confuse you. Your brain will always make you want to think that Forex. But the quicker you get hold of your mindset, the better for you. You have to figure Forex to a way where you can teach your strategy to a 10 years old, and the 10 years old will understand what you have taught him or her, and they can trade with it. When things become difficult for you in the financial market, it simply means that you don't have the correct strategy, or you're not getting it correctly. So, Mr. John Bosco, I want to talk about traders having a simple trading strategy and how this can help them, how they can focus on simplicity rather than complicated strategies.
Okay, there's a lot of complicated strategy out there. I don't want to be mentioning names because people that created it works for them, but that simplicity, that thing cannot work for every other person because, like I said, we are not the same human beings. Some people have higher IQs, they can remember so many things, they can cram. Some people have these abilities. Everybody can have it. And if you want to develop it, there's an issue. You might even get frustrated trying to develop another person's ability. For me, I have to focus on my strength and leave other people's ability. The person I learned Forex from was trading the 1 minute time frame. Like that was the last course I bought. The guy was trading the 1 minute. You can imagine 1 minute's time, that's where he enters. Well, I was finding it difficult to trade like this guy. At some point, I have to tell myself, I have to find a way to do this myself. And that was when I started looking at the charts and I figured out my own style of trading. Now, simplicity is very key. And that is what we promote in this platform. And that is what me, Simple Trading Professor, and myself, Don Bosco, and that is what we teach here. Whereby that you need to have a few set of rules. Simplicity is about rules. It's not about analyzing what happened in every candle. You're already confusing yourself. It's about you having, and though over time you will develop some intuition or some experience along the way, and how you can be doing things differently by yourself. But this is what things you will discover by yourself over time. But simplicity is key. If it's not simple, it's not you can't do it. Having so many charts. For me, in my trading charts, I only have one indicator. Now that indicator, the only thing I use it for is for entries and potential turning points. Yeah, because I know that in as much as I am expecting the market to go somewhere, there is no way I could know a potential turning point for me to avoid whether to add position or to close my position. So that indicator helps me to identify where good area for me to enter, then identify to potential turning point. Then I do my technical analysis in terms of understanding trend by looking at the charts. So my strategy is just simple. You understand? Because once I analyze the chart, I already know. Once after analyzing the chart, then I now map in the chart where I want to enter. Now, once market gets to those places I want to enter, I look at those indicators. Okay, does it make sense for me to enter? If it is, I just jump in. So simplicity is important in your success in trading. Mr. Peace, I can't really hear you. What were you saying?
Okay, so I love what you just mentioned just now, that you have just one indicator on your chart. There's this popular man, Bruce Lee. There's something he said. He said it is not a daily increase, but a daily decrease that is important. Increase, decrease daily. We don't understand this. No, don't understand. But let me get into it. Perfection is not achieved, or perfection is achieved not when there is nothing more to add, but when there is nothing more to take away. Mr. Jambos, do you understand that? Perfection is not when there's nothing more to add, but when there's nothing more to take away. Try to remove more until you find that there's nothing more on your chart, or there's maybe one indicator on your chart for you to trade. So exactly. Simplicity is the key. The simpler your strategy, the more likely you are going to succeed. Exactly. There's a man that wrote in the financial market, the name of the book is Zero to Hero. This man said, the simpler the strategy, the easier it is to execute, and the more likely for you to become profitable. So simplicity is just the key to the financial markets.
Exactly. It is important because a lot of things are indicators. Fibonacci is an indicator. Your trend line is also an indicator. Yes, because you make decisions. Like Professor said, simplicity is key. It might have one that can help you to make decisions. For me, I don't use Fibonacci. Fibonacci is an indicator because you believe that if you get to a particular number, you buy or sell. I don't use it. So I don't use trend line. It's about what you think that works for you. So I already identify my own, which is one. You understand? So that's the way it works.
Yeah, Richard Branson, he said, complexity is your enemy. Any fool can make something to be complicated. Again, any fool can make something complicated. It is hard to keep things simple. It is hard to keep things simple. It is hard to have a simple trading strategy.
Whatever trading is, in as much as we might have rules and everything, over time, as a trader, you develop as a person, whereby that your
Yeah.
experience teach you a lot of things. And once your experience start teaching you something, you will know the things to add and the things to remove, and things to leave.
Yeah.
Just over time, people will always evolve. Like I always tell people, forex trading is not cast on stone. It's not like if it's not like this, it cannot be anywhere, anyhow. It can be different ways. I really like what we are discussing right now because this is what so many people wish that they have access to. But we're actually giving this knowledge to you guys. And I can tell you, once you practice what we have said tonight, there is no way you not become a profitable trader. There is no way, unless you're not serious. Unless you're not serious, honestly.
Traders need to understand that the forex market is complex on its own. It's a complex system.
Yeah,
The
sure.
successful trading needs not to be complex. In fact, the best strategies are often the simplest. Now, I know a lot of traders might be asking, what is now advice for them? The advice that we're going to be giving to you is stop wasting your time and your money on complicated strategy that doesn't work. Focus on simplicity. This is the voice of the simple trading professor. This is the simple trader community. Mr. John Bosco, appreciate it so much. Thank you for joining me on this podcast, on this session. I really love you. I know a lot of traders will learn. A lot of traders will learn a lot from you from this session. And I know they're going to be part of our community, the simple trader community. They're going to be part of what we're going to be doing very soon, where they can learn the DSDD strategy. Mr. John Bosco, you are the one that's going to handle the DSDD strategy, the Fibo sniper strategy, the simple trading strategy. So they're going to learn a lot from you, a lot from myself and from other coach on our platform. So we're going to be having them on the platform. So Mr. John Bosco, I really appreciate you. Thank you so much. It's so great to have you on the set.
Thank you so much, Mr. Pace.
Okay, so let's call it a day and let's go trade. Let's go make money from the markets.
All right. Thank you guys. See you guys later.